The Reserve Bank has gone into bat for the banks on the PR war on interest rate rises. Assistant Governor Guy Debelle acknowledged the increased cost pressures on banks, but he dismissed claims the RBA no longer controls interest rate policy. It came as the Prime Minister launched an extraordinary attack on the ANZ Bank.
They won't be rolling out the red carpet in Canberra for ANZ's bosses.
I think the combination of putting your interest rates up, then announcing job losses and then seeking to blame it on someone else, both of those decisions on someone else, is reprehensible.
While the Prime Minister doesn't think much of the bank's behaviour, their argument that rates need to be put up because of higher funding costs found support at the RBA.
Investors are demanding a much higher compensation for bank credit risk now than they were in mid-2011.
He was merely pointing out that one of the consequences of the problems in Europe is that the cost of funds for the Aussie banks is rising too.
But Guy Debelle played down concerns the central bank is losing control of interest rate policy because lenders are moving independently.
I don't think that that has changed materially at all.
What has changed and stabilised global conditions is the European Central Bank's cash injection late last year.
That substantially reduced the financing risk for European banks and therefore reduced the risk to the global economy flowing from the European crisis.
Now, whether this happier state of affairs persists is difficult to tell. There have obviously been outbreaks of optimism over the past couple of years, which were dashed.
There was an outbreak of optimism in the latest National Australia Bank Business Survey. The debt-fuelled expansion, it seems, is off the agenda.
No one's borrowing. The economy's running a trend, but 67% of firms in the survey told us they don't actually need any money.
That's the weakest response in 3.5 years. Philip Lasker, ABC News.